Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. It's a pleasure to see you again. And today we're going to be talking about early stage venture and seed investments. And new feature here on VCTV, we've got the comments box open. If you've got questions or comments for us as investors around today's topic, drop them in. I'll do my best to ask them in real time. If not, we'll be available online everywhere on social media afterwards for follow-up as well. And if you'd like to be on a show like today's, reach out to the team and or myself and we'll find that right spot for you. Speaking of the team, a big thank you to the LATOKEN team and to Maria and Hasmik for making VCTV possible every single day. Again, I'm your host, Kyle Ellicott. Let's go ahead and jump in on today's topic, early stage venture and seed investments. We've brought together some great investors from around the world to share their thoughts around this. So let's go ahead and meet them. First up, Jason, welcome back to the show. A little intro and a little background for everybody.
Great. Well, glad to be here. Thank you, Kyle and LATOKEN team for having me back. My name is Jason Jacobsohn, managing partner of Propellant Ventures. We're about bold investing and empowering the future with the different types of opportunities we look for. We're focused on looking at pre-seed and seed stage opportunities throughout the Midwest part of the U.S., and primarily in B2B industries such as healthcare, future work, fintech, edtech, and supply chain. I personally have been active in the entrepreneurial and investment community for over 20 years throughout the Midwest region of the U.S., and currently run the Fowler Institute chapter in Chicago for the past 10 years. So glad to be here and look forward to the topic.
Wonderful. Thank you, Jason. Henry, welcome back as well. A little introduction and background for everybody, please.
Absolutely. Thank you, Jason. Thank you for having me. Henry on here. I have an advisory firm that I work with mostly startups and SMBs, working very much on the fractional CFO and COO side, and also a venture partner for a venture fund focusing on early stage, my early stage or late seed to Series B, or Series A or B, around that range, depends on the deal. And I'll tell you a little bit more about. Thank you for having me again.
Wonderful, thank you. Gary Fowler, it's been a few minutes since we've seen each other, but for those who may not have been tuning in, a little introduction and a little background.
Yeah, thanks, Kyle. Yeah, it seems like we just seen each other 20 minutes ago. I don't know. Anyhow, I think a little longer than that, but not much. Anyhow, my name's Gary Fowler. I'm a serial entrepreneur and investor. I love artificial intelligence, quantum computing. I've done 17, going on 18 companies. Hopefully, by the end of next week, it'll be number 18. And so we believe AI is a new electricity, and quantum is going to have a dramatic impact on our lives. I've been involved in 2 unicorns, either a founder of on the original team of management team. Click Software sold for Salesforce at $1.35 billion, and also Eva.ai, a company I started 5 years ago with Dr. David Yang, an AI HR tech company. So we, as GSD Venture Studios, we curate companies from around the world using Silicon Valley as a port to help them go global. Thank you, Kyle.
Wonderful. Thank you, Gary. David, welcome to the show as well. A little introduction and background on yourself, please.
Yeah, sure. Thanks for having me. I'm thrilled to be here. I work for Hall Venture Partners. I'm a general partner there. Hall Venture Partners is a family office sponsored growth venture fund. We also happen to be an opportunity zone fund. So the Hall Labs, which is the family office, is about 500 plus people, 200 plus engineers in every vertical. And we focus on incubating seed stage businesses. And then Hall Venture Partners invests when we bring a strategic in, kind of at that growth phase to help accelerate and scale businesses.
Wonderful. Thank you, David. Gary and I were just talking about family offices and some of the investment styles they have, but also the investments they're making around impact and sustainability just moments ago. So pleasure to have you on today's panel. Garrett, last but not least, a little introduction, a little background, please.
Sure. I've been in venture business for too long, probably 30 years or so, but I've been really focused over the past 10 years creating impact in our verticals. We create impact financing early in our target companies. So we try to invest in either A rounds or even before that in clean energy solutions in smart transportation and smart cities. We only invest early when we still see plenty of upside in our investments. And we finance entrepreneurs with an established product. They have to have a product available in the market, embracing the new green digital economy. So that's where we are. We make investments, as I said, fairly early in their life of the company, but we need to have a product so I can do my research and checking out exactly where they fit among their peers. And that's what we've been doing. Returns have been pretty good, and we're pretty happy with being in San Francisco.
Wonderful. Well, since all of you are joining us today, have been making investments and have been in the space for a while, we'll just say, myself included, talk to us about what's happening in terms of early stage and seed investing here in 2021. There was quite a bit of activity that happened last year, but we're 2 months in officially now here into the year, and it feels like more and more investments are going in at the seed level in these 2 months than what it felt like we saw last year. So we'd love to hear each of your perspectives on where early stage and seed investments are. Jason, let's start it off with you. You're based in the Midwest. You're looking at industries like fintech and others. What are you seeing happening in this space in general?
There's a lot of activity. It did not, we had a little slowdown part of last year, but as we know, the end of last year had a record year. And so same thing in the Midwest, we're seeing a lot of activity. A lot of micro funds have started the last several years, and even more has started over the last year. And some are very focused on targeting underserved founders as well. And so some are focused on specific types of founders. Others are focused on verticals or certain industries. So some micro funds are starting to target specific verticals within the seed stage funding. There aren't as many pre-seed funding vehicles out there. We still only have a handful. Propellant Ventures does invest in that stage. So we see a gap in the market in the pre-seed, where we'll still invest alongside angels or angel groups, but we can be that lead investor, or we can co-invest. But either way, there's a lot of activity happening, and there's no shortage of funding out there. The great opportunities will still get in front of investors. So this year, right away in 2021 in the Midwest, we're seeing a ton of activity, and there's no shortage of great opportunities to take a look at. So I'm very bullish on the start of the year. It's going to be a good year.
Wonderful. Thank you, Jason. And also hello and a shout out to all of our viewers. We see your comments coming in. So hello. I see we have someone joining us from Venezuela. So it's a pleasure. Thank you for tuning in. On the flip side, Jason in the Midwest, Garrett, I want to come to you here in the Bay Area. How are you seeing seed investments and early stage activity in general around the Bay Area?
I mean, it's very busy in the Bay Area, but our focus is really on smart transportation. So we're seeing a lot of SPACs in the area, which is past our stages usually. So they're a little more older and a little more established, but it's very interesting to see the amount of activity. And with the change in administration, they're talking about, they're really trying to promote, the alternative fuel world. So we're seeing a lot of activity both in our sector, where companies have a product available in the marketplace, but are still looking for funding, and they could be, either in common stock or A round, which is all we do. We don't do B, C, Ds. Our experience has been that those are, full market babies, and sometimes they don't really go that well. So we're focused on fairly early in the company's history, but we need to make sure that they have a fairly put together management team. They have a direction and a product that's in market, so we can do our homework in those areas. But it's really smart transportation. We think that's the future. Really believe that internal combustion engines, which have been the past 100 years, are on their way out over the next 5 or 10 or 15 years, and we're really focused on not only smart transportation, but not really the cars. So we do follow Tesla just to follow what's going on with them, but we're more focused on commercial vehicles, and as you guys probably already know, in the transportation business, all vehicles are between class 1 and class 8. 1 and 2 are cars, and 3 are pickup trucks, but the delivery vans are really class 4, and class 8 are 18-wheelers. We're really focused on class 4 through class 8. So the heavier vehicles and what's going on in that area is really where we're focused, and it's booming.
And speaking of booming, I mean, Garrett, tell us a little bit about some of the early stage projects or technologies you're starting to see. I mean, some of us here have been in the Internet of Things space or connected space for some time. Myself, I've seen the promise of mobility for the last decade, and it just seems like we're now getting to the beginning stages of that. What are you seeing more specifically on the technology side in the industry?
Yeah, I think you're absolutely right. It's been around for a long time, and people have been waiting for it to kind of, really happen. And it is starting to happen. And I think in the logistics area, a lot of the vehicle areas, they've already done they have their product in market, and they've done specs, so they're up and away. But, they're not all going to be successful. So we're trying to figure out which of them really have the good technology, which of them have the software, because it all comes down to software, really. They've got to have that, because that's really the key, and they have to be able to build the vehicles. A lot of guys are talking about, we have vehicles, but it's like, okay, dude, how do you build them? Do you have to go to Ford and buy the Transit 350 and then put your put your box on it, on the back of it, and sell it? So we're really focused on making sure that the company has the technology and the software to support what they're trying to do. And I think that's very important for what we're trying to do. So a lot of our due diligence is really talking to the engineers and what success have you had in the past? What is your background as far as the technology and the software, and what products have you developed in the past? Because that's very important to us.
It's a continued great point, and thank you, Garrett. Henry, I'd like to come to you next on this. I mean, being on both sides of the coast, I think you're in New York right now, so the East Coast. What are you seeing around early stage and seed investing? I mean, open up a little bit more for us than you have in the past. Since today's episode is very focused on this, would love to hear how you're working with companies, what you're seeing, and then just as an investor, what's getting you excited in that space? Oh, Henry, you're on mute. Sorry about that.
My apology. So it's kind of interesting time that we're in, continuation from last year when COVID started. I call it what I call a spilled over effect from last year. I think it stems from a couple of things. If you look at about 12 years ago with the financial crisis back in 08, 09, we see a lot of the beginning seeding of some of the unicorns that we have seen went public the last few years. Your Uber, your Airbnb, there are just so many more that are in a backbone or might be coming into fruition. Now, with this second crisis, what I'm talking about is COVID, we're seeing very similar kind of playbook. We have seen a lot of startups are coming up with different business ideas. As businesses are being disrupted as a result of COVID, people are coming up with very interesting solutions. I think that's number one. Number two is, I think when people are locked themselves in or quarantine or work from home, the barrier, the advantage of proximity have been diminished. Let's say if you live in San Francisco, whether you live in San Francisco or whether you live in, somewhere in the Cayman Island, to a certain extent, it makes no difference because people are working from home. So the decentralized workforce or the tap of talent have exponentially been sort of expanded. So I think, among other reasons, I think those are the two reasons I see why that, startups are really continue going strong.
Thank you, Henry. Gary, to you, same question. I mean, what are you seeing in terms of activity? We spoke earlier today about some of your investments that you're making now in Africa. You've also got this new fund that you're putting out here in the United States focused around early stage investments. But in general, what are you seeing as an investor? What's getting you excited, and why is this industry changing?
Yeah, I mean, we have 3 companies in Africa, Latin America, Argentina. We're seeing places that have been literally untapped before, and we're seeing opportunities there. So, and the one thing we're seeing, Kyle, we look at it at 3 levels. 1 is acceleration, 2 is regional dominance, and 3 is going global. And so I'm seeing these companies have really matured, and surprisingly have matured through the regional dominance stage and truly ready to go global. We're also seeing that in terms of, it's hard to get funded still if you don't have any revenue. If you just have an idea, at least that's what I'm seeing across the board. But once you have some traction and you've got an interesting model and you got the right kind of month over growth, there's a lot of money to be had. The other thing that I'm seeing that is a bit different is the family offices have really stepped up. So we're working with a number of the family offices worldwide. And, as I've said before, once you reach 1, it's really a reference introduction. That'll get you 5, and it just keeps growing and growing. And these are companies, I mean, the one billionaire I talked to, just in his checking account has $5 billion. So you're talking about enormous wealth that's really looking for technologies. One is on the impact and sustainability. Obviously, if it's impact, you've got 1 up. But also in AI and quantum computing. So they're looking for companies that are going to make a dent in the universe. And they're extremely well educated in terms of the knowledge that they have. It's not like they're, the ones that I know are not like they're passive investors. I mean, they really know AI. In fact, I was on a event with one today. And understands exactly what's happened in the market and why they have to, in order to create multi-generational wealth in their family office, what kind of companies that they're looking to invest in, and how do they really complement their line of business that they have in Europe, right? And they've had for almost 200 years. So imagine, starting out with clocks and moving up to car electronics.
That's a good point. And with that, I want to pass it over to David. So David, I saved you for last. Whether you're excited about it or not, I've saved you for last. So we've got VCs, angels, a mixture of all in between, but now as a family office, how are you seeing early stage and seed investments? Are you looking at them? Are you not? Tell us a little bit more about that.
Yeah, no, happy to kind of go into that in more detail. We kind of focus on everything from sustainability to personal transportation. But you brought up IoT prior, and that's really an area where we live. Anything that you see that will be incubated through our family office will be something you can touch and feel. Generally, it's not going to be something that is solely software. Everything will be technology driven, but it'll be product based. So, the furthest company along in our incubation process is a company called Vanderhall. Vanderhall is a 3-wheel auto cycle, and happy to say that company went profitable this year. But we're building out other verticals within the power sports space for the EV market, and that continues to be a very hot and strong market for us. But the biggest things that kind of we focus on, we're really a modern day Edison Labs. So the things that we love to see are heavily patented technologies. So those underlying businesses do have asset value within that portfolio of patents that they have. And just in terms of the overall market itself, I too saw a little bit of a slowdown last year, but overall, I would say there's been some positive things to come out of that. I think the diligence process has changed a little bit. People have gotten more comfortable doing exactly what we're doing here today, whether it's on Zoom calls or meeting in some sort of format online, that would have never happened 2 years ago. And it's allowed us to have a larger breadth and reach to reach new companies and to kind of develop that process. And the other things that I've seen is, regulation change, whether it was Reg CF or Reg A, increasing the amounts of which can be funded. That's made a big difference for startup companies and accessing the capital that they need. And then the Jobs Act itself and creating these fintech platforms that are allowing companies to work alongside of those platforms in order to get to angels, family offices, high net worths. There's kind of there's a little bit of a fit and a niche for all of these platforms out there. So activity's definitely picked up.
I see shaking heads all around, and while all this stuff is great, and there's never been more opportunities than ever to raise capital for your company. One question directly for you as a family office is, how does a company that's raising their early stage seed financing, so generally under 10 million, we'll say we won't argue those differently. We'll just say less than $10 million. How do they come to approach you as a family office that's not a traditional venture capital, that's not a traditional angel? What's that process look like, and how do you welcome in those types of companies?
Yeah, so we're based in Provo, Utah. Utah happens to be a marketplace right now that's second to Silicon Valley in terms of technology growth and jobs. So we've really made a name for ourselves, at least within the Utah area, and starting to broaden that reach outside of that. But people just reach out to us, and it's we have a process that we've developed over the last 70 years. The family made its money in the 50s, invented the man-made diamond, and it's that patented technology that we used to sell kind of multiple times and fields of use. And that's really what we continue to look for, is platform technology where we can have multiple exits with the same tech. And so I think through that lens, people get a sense of kind of what we're looking for, and we're approached that way. But we'll do everything from support businesses that come in and give them kind of all the resources that they need through a shared services model that we have on campus.
Thank you. And Garrett, I want to come to you next. I mean, you focus very heavily on mobility and smart cities. And smart cities, we spoke a little bit about last week here on VCTV. Give us a preview as to what's to come, or maybe some of the areas of opportunity that founders should be thinking about if they're looking to start building for the future of cities. And even more so now, as cities may be changing from an infrastructure and an interaction point with us as consumers. So what are you seeing as areas of opportunity in the future of cities?
Yeah, very good question. I mean, one area that we're definitely seeing is, if you look at the bus area, I think that school buses is an area that we've been focused on for the last couple of years, made some investments in that area. And I think it's well over 50% of new bus purchases are electric buses. Which is a fascinating area for me, because it's cities, but it's also school districts, et cetera, that's moving. And also the buses that are driving back and forth. So I can look out my window and see them going back and forth. They're still mainly, internal combustion driven buses. And I think that's going to change dramatically. But that is all about charging infrastructure. It's not that they can't find or buy a bus that's electric or hydrogen. It's how do they get it to travel the distance they need it to go to pick up the people they need to pick them up, either that's students or people going to work or just driving around shopping or whatever they're doing. So it's really a focus of us to try to figure out what these cities want, what do they need in the infrastructure. And also it's not just the vehicles, it's the in San Francisco, they're redoing one of the big roads here. And they're putting in, a new traffic signals and new software to control the vehicles, and also the charging infrastructure, as I mentioned. One of the areas I think is really fascinating, and we've done some work in this area and done some investing, is charging infrastructure and wireless charging, where instead of having the wires overhead where the electricity is coming from, they bury it in the road. So the bus needs to travel 20 or 30 miles to do its loop and then come back. And they just put it in the road. So it goes down the road, it does its route, and as it stops to turn around, it just parks for the bus driver to have his break or his lunch or whatever. And she could just sit there, and it just rolls onto and it just goes beep, 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 beep. And they just stop right there because there's no passengers on it because it's at the end of the route. And it just recharges, and they just turn around and go back the other way. So that's an area that we're looking at. So I think what we're going to see in the cities is the adoption of the spending is not going to be just to pave the roads, which we all know they need it, but to change the way cities work so that the people that use the public transportation, whether it's schools, to go to school or to go to work, can do it cheaper. And some of the systems are just to put when you get on the bus and you instead of dropping the coins and dollar bills down to the bus driver, she is just sitting behind an area that is blocked out, so they don't have to worry about safety. And you have a card, and it just registers, and you can do that right online. So there's lots of areas in the cities that can change for the better, so that people that are using the transportation of the cities and the roads can do it more efficiently, create less traffic jams, etc. So that area is, and it's good for clean technology and which is hope the way we're all going.
Right. Well, and we may have some fintech hidden in there as well. But before we get to that, David, I want to come down to you. I mean, you and your firm have actually made about a half dozen or so plus investments in this space in addition to Garrett. So we'd love to hear if there's any other opportunities that you were seeing in the smart city space that, again, our audience can think about start building in or start investing in.
Yeah, so the way we kind of look at it is we think about the major needs. So power and electricity, HVAC, and waste are all kind of some of the major issues. And then the architecture itself, so building technology. And so I'll give an example on the waste side, where we've invested in a company called NeverDump. And this is where you kind of have to take a product and prove a product and market fit. And then that product itself, you can see the line extensions. And we went after the RV space first. I don't own an RV, but from talking to people that black water is probably their least favorite thing to deal with. And we've created a technology that will allow you to burn the waste within a self-contained unit and put that energy back into the RV. So when you think of those line extensions, porta potties, off-grid housing, never needing to tie yourself back up to mainline sewage, it can kind of work for anything. And the other investments, electricity space, like I said, and HVAC, happy to go into to some of those as well. But that's how we think about the smart city space in general, is just finding an area where we know there's a need and it needs to be disrupted. Great.
Thank you. And a shout out to Tolga and Loop, who's a part of the VCTV family. They focus on EV charging and talk a lot here on VCTV. So a shout out to Tolga and his team at Loop in the EV space. It is a huge opportunity, as both David and Garrett have mentioned as well. Henry, I'd like to come to you on areas of opportunity. What are you seeing out there that's getting you excited in seed or early stage investing right now?
Sure, absolutely. I think continuing with one of the panels that I participated along with you last week was we talk about fintech and payments. Now, I share with you that historically, I would say within the last maybe 5 to 10 years, it's what I call in the startup space, what I call industry plus tech. What I mean by that is you would have seen a company, let's say in education, there will be an education plus technology, ed tech, and then you will see ed tech, which is advertising plus technology. Obviously, fintech, it's finance and technology. We have seen a lot more companies that have historically been what I call an industry plus tech, moving gradually to what I call industry plus fintech. You have another term for that, maybe it's embedded finance. There are just a lot of interchangeable words. So, Walmart have a huge giant like Walmart's getting to fintech. They've been getting a lot of press for that. Obviously, Apple, the last few years, they have built Apple Cards, becoming very popular. So a lot of startup, it's adding the fintech component to it. I see a lot of excitement in that space.
Yeah, couldn't agree more. And now we've got Visa and MasterCard who have pretty much opened the gates on their payment networks, allowing for early stage companies specifically to start building and accessing all of their merchants and all of their customers worldwide. Gary and I earlier today talked about the Central Bank of Guyana, who's doing something very similar, opening up sandboxes and pilot programs. I mean, we're starting to see this on an aggressive scale, to your point, Henry. So anyone out there that's looking for smart cities and mobility, David and Garrett are the two to talk to. When it comes to payments and fintech, so far, Henry is the person to talk to, but I got a feeling Jason might have a little bit more for us on that as well. So Jason, tell us what you're seeing in the Midwest in terms of areas of opportunity, or just globally, since you're talking to so many companies in general right now as well. What are you seeing as areas of opportunity?
Yeah, one of the spaces that I'm excited about is the future of work, specifically around virtual events. Since April of last year, I've been holding fully immersive events. They're 3D environment to have an avatar. You have your own avatar. You walk around, get to meet people one-on-one, have small group discussions, private chats, etc. So I see that as a huge opportunity, and there's consolidation happening already with Hopin acquiring StreamYard, which is the platform we're using today. They acquired them for $250 million. So they are going to be an aggressive shopping spree or acquisition spree this year. They bought another company as well. So we have a lot of platforms out there that we've all used. There's different use cases, different experiences, but I see that as still a great opportunity. There will be some consolidation, but I think virtual event space or future work is extremely a hot area. And that can also obviously tie into employees and employers connecting better, being more effective and efficient with the remote work, which has only been accelerated because of the times we're in. So that is another big area within future work. So I'm excited about what it has for the opportunities for investors.
And I'll add on to that the idea of flexible work as well, right? So those who may spend some time in the office, sometimes not in the office, but also flexible spaces that we're starting to see, and this idea of the entire back office process as well, right? From HR to payroll to just checking in and mental health as well. There's so much to Jason's point of opportunity. So fintech, future work. Jason, fintech, also Henry. Mobility and smart cities, David and Garrett. Gary, close us out. Where are the areas of opportunity you're seeing in early stage and seed investing? Oh, Gary, apologies. It looks like we had you on mute there, so sorry for the technical difficulties, but go ahead.
So, I mean, it's keep it simple, stupid time. We got data all around us, 40 zettabytes of data, enough to go back and forth the moon if it's a CD stacked up 29 times. Growing at 67.8% per year. We're inundated with information. I mean, think about it. In our own personal clouds, we got about 300,000 items. The entire World Wide Web in 1996 was 257,000 websites. In our own personal clouds here, each one of us had more data than the entire web number of websites in 1996, and the number doubles every year. In 5 years, we'll have 10 million items with the Internet of Things. Think about it. Every week, how many times you say, I know that file exists, but I can't find it. Why? I've either forgotten the keyword or forgotten the location. So we're in this state, as Alvin Toffler said, of infobesity. We're inundated with data. We need AI, unsupervised, semi-supervised AI, to act as truly not a smart but intelligent assistant to help us be able to guide our lives further, to be able to help us make sense of the data that's around us and do it in a very efficient and optimized way, and we need it sooner or later. I mean, think about the repositories we have today in front of us: WeChat, Telegram, Dropbox, Box, Google Drive, all your email to 5 to 7 email addresses, Messenger. I mean, we just have it. We're inundated with it. So I'm very bullish on artificial intelligence companies that are deep learning, machine learning, across multiple vertical markets that are really enablers of technology, whether it's supply chain or robotics, et cetera, to help us drive the future. And also interested in early stage quantum companies.
And I'll add on to that, early stage blockchain companies as well. We talked earlier this morning, Gary, you and I, Mark Cuban said himself that if he were to start a company today, it would be focused around and on top of blockchain technology as well. So a little promotion there, and also self-promotion, as I love the industry itself. And with that, we are at time. So I would love to come around to everyone for a quick closing thought, and then also where you can be found online to continue the conversation. So Jason, let's start with you, and we'll go Hollywood Squares style here. So Jason, you're up first. Closing thought, where can everyone find you?
Yeah, now is a great time to not only be an entrepreneur, but also to invest in companies. There's a lot of great opportunities there, especially at the early stage, pre-seed stage. So the opportunities are there. And so, take advantage of while things are really going well. People can get a hold of me on LinkedIn, as well as my email, jason@propellant.vc. And thank you again for having me here.
Thank you, Jason. Henry, next. Closing thought, where can everyone find you?
Absolutely. I agree with you. I can't agree with you more, Kyle, on the blockchain side. I think I shared with you last week that, you asked about, Coinbase or going public. I mentioned to you, I wasn't surprised at all. I think they were just riding the wave of, the crypto prices, or Bitcoin rather, going to the moon. So very, very smart. Once again, Bitcoin is maybe, sitting around 4,000 or 5,000, probably don't see Coinbase or, taking their company public. But once again, when you have, the crypto, or Bitcoin rather, going to 40, 50,000, no end in sight in terms of the price, they're just taking advantage of, the hotness of the market, for crypto blockchain related companies. Henry on here, once again, feel free to reach out in LinkedIn, Henry H on or Henry on, and also my email, henry.h.on@gmail.com. This is my all catch email for the public. Thank you again for having me.
Thank you very much, Henry. Garrett, same to you. Quick closing thought, where can everyone find you online? Oh, Garrett, you're on mute. Apologies for that. Let's take you off. Go ahead.
LinkedIn, my website is wcm.com. We can learn about our venture activity, but I believe this fundamental transformation to alternative fuels, creating a smart transportation city ecosystem, is going to continue to be lead the way. The paradigm is led by technology solutions, leveraging the 5G speed. We talked a little bit about AI, IoT, and data-driven applications, creating smart transportation. I think that's just going to continue to grow, and you got to focus on the companies that are really providing the technology underpinning all this. It's not just who's building the vehicles; it's the technology underlining it. That's the very important part, and that's what we focus on.
Wonderful. Thank you. Thank you, Garrett. Gary, to you, closing thought, where can everyone find you?
Yeah, so this is an exciting time. The digital transformation that's happened over the last year has fundamentally changed the way we work, changed the way we invest, and changed the way we look at startups. So I'm excited about AI and quantum. So early stage AI and quantum, especially if you have revenue, we're interested. You can reach me, Garrett Fowler, on LinkedIn. You can reach me on Twitter. I have a show 3 times this week. GST Presents. Tune in. We're going to be talking about investing and family offices. So tune in, and thanks for inviting me. I appreciate it, Kyle.
Thank you very much. And David, last but not least, close us out, your closing thought, and where can everyone find you online to continue the conversation?
Yeah, Kyle, thank you for having me. You can reach out to me on LinkedIn, or my email address is dkunz@hallvp.com. That's HALLVP.com. The one thing we kind of didn't talk about today was healthcare. And, I would say in line with AI and all the data that we have, predictive healthcare is something that we're spending a bunch of time on as well. And knowing that 70% of chronic disease can be preventable is pretty amazing. and will just require a shift in kind of how we all think about it. And we have the data out there. It's just a function of how we get to it. And I think that'll have a huge impact on the whole healthcare industry.
Wonderful. And David, Garrett, Gary, Jason, and Henry, thank you all very much for sharing your thoughts and insights today around what's happening in early stage and seed investments as well. And to your audience, thank you so much for tuning in and all the comments. Again, hello to those in Venezuela as we saw the comments coming in, and to everywhere else around the world today. If you like what you heard, make sure you click subscribe, share the episode, and also check out the archive on LATOKEN.com to hear from all of today's speakers and the entire speaker set of the VCTV family. And if you'd like to be on a show like today, reach out to the team and or myself, and we'll find that right spot for you. Speaking of the team, a big thank you to the LATOKEN team and to Maria and Hasmik, who make VCTV possible every single day. I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott and on all social media platforms, along with, again, all of our speakers today. Everyone would love to hear from you and to continue the conversation around the industries we discussed and other topics as well. So make sure when you reach out, you add context where you heard us and what you would like to continue the conversation about as well. With that, we'll see you back here tomorrow for more VCTV. Everyone have a wonderful day. Take care.
Bye-bye.
Bye.